Hello traders, Cousin Vinny coming to you from theclosingprint.com on October the 25th, 2015. In this video we'll cover the stupendous performance by the indices last week. S&P was up 2%, the NASDAQ was up twice that, plus 4.18%, and of course the IWM underperformed at plus 0.37%. Tick cumulative moving higher on both the New York Stock Exchange and the composite. NYSE and NASI are both positive, moving higher. Breadth, we see no MADs or MDDs last week, but we do see New York Stock Exchange advanced decline climbing. New York Stock Exchange high-low is stalling at resistance. We see CPC in the topping zone, also what we call the red zone for equities at 0.77. Currencies, US dollar had a huge move last week and up to the upper Bollinger Bands, the top of range, with STO at 80.94. So it is overbought. Yen is at the bottom of range, as you would expect, and oversold, with STO appearing to be turning. Bonds, we saw TLT on the daily and weekly moving sideways. Commodities, oil, copper, gold, all pulled back somewhat. Crude oil a little more so, and that was due to the strength in the US dollar. Sectors are overbought. There's a lot to look at here. We'll cover each sector. And setups, we'll look at the IBD with observations and possible setups going into the week. Okay, so let's look at the weekly chart of the S&P 500. Note that we have had 4 straight up weeks without a respite. We had a hammer a month ago. STO continues to push higher. MACD's crossing. We're seeing positive momentum, and we have nice volume. The thing to point out here is the likelihood of a pause or respite increases as we hit 4 weeks up. Look at the previous occurrences where we hit 4 weeks. The average is 4 to 5 weeks. We've had a couple of occurrences under different circumstances. This was the Ebola scare back in 2014, and we summarily rallied higher. Previous occurrences, 3 weeks, had a little bit of a down bar here. 2 weeks, a pause, 2 weeks, a pause. Debatable, 3 weeks with a little spinning top, we had a slight pullback, pause. 4 weeks, a pause. And back here in 2013, we saw 6 weeks straight up and then move sideways. So between 4 and 6 weeks we could expect a respite. We are going into the best months of the year, obviously. So we're watching this scenario play out with a little bit of caution, but yet long-term bullish nonetheless. Here's another look at the weekly through the lens of the bond stock ratio. Above we have the Elder Impulse, which we can see we had a blue bar and then 3 green bars right at the moving average here, the 50. But what we want to pay attention to is the 65 period moving average and this red line, which is the ratio between UST and SPX. We've crossed through now. That becomes more bullish. We don't make a straight line down to new lows, but do note the 65 MA here is flattening out and trying to start to turn down. We would expect to see a little bit of a blip up this week and maybe then a continuation down. So this is overall more bullish than bearish on the weekly time frame with the UST SPX ratio. The S&P 1500 composite, new highs minus new lows percent, continues to move higher. We were on a buy signal some time ago. We pointed out as we crossed over above the 0 line on the histogram, and the bears were summarily pummeled over the following few weeks. So This indicator did point in the right direction. Currently it shows no reason to fear a change in direction, but we are near the upper Bollinger Band on the S&P 1500. So all things considered, this is more bullish than bearish, but we could see a pause with what we're seeing on the daily charts. Looking at the SPY on the daily, we're pushing right up against this volume by price bar resistance. We put in a hanging man on Friday. There is a possibility with this gap up that we could see a reversal. That's what we're anticipating. With stochastic embedded, we did have nice volume this week, and MACD is positive, moving higher, as well as tick cumulative. It's just a feeling that we could see a respite here. Doesn't mean that has to happen. We could also gap above this level. That's also a possibility. That would start out the week bullish. So remember, the weekly chart, 5 weeks up, increases our chances of a respite. I think more than likely we could use a pause here and get ready for a move into the end of the year. The reason why I think that we could see a respite, all you have to do is look at the NASDAQ 100, which bolted higher, long-legged doji, outside the upper Bollinger Band. Above resistance, this is what is possible, obviously, for SPY, but the technology sector move higher, and this has a lot to do with Amazon and Google, of course. Microsoft did quite well. All those gapped up. There's a possibility of a fade there as well. Stowe is in the red zone, and we see the NDX A50R at 75%. This is in the overheated zone, much like we saw back here in August when we were oversold and looked for a move higher, which is what we got. So when we reach this zone between 70 and 80, this is where we start to look for possible move down. Just keep that in mind on the NASDAQ 100. This is a chart of the S&P 600 small cap index. Note that we pretty much moved sideways the past 3 weeks. Stowe is embedded here on the 14.1, 5.1, continues to gyrate. MACD is positive. We could see a push higher to the 200 period moving average this week if the indices all continue to move higher as well. So we'll be keeping an eye on that. Note the volume by price resistance level overhead as well. And the Russell 2000, which looks very similar. Note this curvy pocket in here, so if prices do push into this level, we could see a return to risk on, and the small caps outperform this week, while the possibility still remains that we could see weakness in SPY, the S&P 500, and the NASDAQ after that outperformance last week. At least a little pause before we move higher. Okay, let's look at some indicators that will support the bullish and or bearish cases for the week ahead. Tick cumulative is rising rather sharply. Note the distance between the moving average, the 10 EMA, and the indicator, as well as price action now hitting the area where we've seen that sideways action for 6 months this year. We would anticipate seeing some resistance in this level as well as what we saw on tick cumulative on the NASDAQ. Also pushing higher outside the upper Bollinger Band briefly on Friday into the resistance zone, and more than likely an area where we'll see a respite or sideways action over the next week or so. NAMO, the McClellan oscillator for the NASDAQ, also bolted higher with prices very strong breadth, and we see NASI continues to push higher with no sign of a change in direction this week. Looking at NYMO for the New York Stock Exchange Composite, we see the same kind of push higher, stayed strong all week as prices continue to move higher, and we see NYSE continuing to push higher as well above the zero line, and no signs of a change in direction. Now, prices could start to change direction before this indicator does. Just keep that in mind going into the week ahead. Some of the other things we're watching, the all common stock advanced decline put in a new high here, whereas the New York Stock Exchange advanced decline is also moving higher as prices bolted last week. New highs, new lows. The histogram continues to push in a bullish direction. This breadth indicator indicates that we could see continuation, but my thoughts are that we probably see something like we observed here back in June. Shorter histogram bar and possibly some selling. This is 52-week highs subtracting new 52-week lows. Some indications that make us think that way are the put-call ratio, CPCs, that closed at 0.77 in the red zone where we've seen inflection points previously. You'll note here in late July, this was near a topping point. We're near the upper Bollinger Band and this resistance level if you continue this sideways as the put-call ratio is down into this zone. Now we could move lower on this indicator, which would definitely push us closer to a possible short-term top. The bullish percent index has not hit the extreme zone yet, so this is more bullish than bearish. We could continue to see this indicator push higher. However, we do expect to see or anticipate seeing a fading of this over the next couple of weeks and then a push higher into year end as well as the first 3 months of the new year. Another indication where we could see a pause, the New York Stock Exchange composite of 2,000 stocks. We do have a Kirby level up to around 10,700, so this could break higher, meet this level, and then find resistance. We do see the high-low indicator starting to pause, so that's giving us some reason to consider a respite as well, where this breadth indicator is pointing to a possibility that we may be a little bit overheated. We're near the red zone and could see a possible inflection point here in the short term. Back to the 10 EMA basically. This is a chart of the Wilshire 5000 composite. Note this rounding top. There's that possibility as well with the 200 period moving average just overhead, the blue line. We meet that level this week and possibly trail off a little bit, regather some strength, and then push higher into year end for a nice Santa Claus rally. Possibly break above the 200 period moving average and watch the 50 period moving average turn back up as well. So we'll be watching all of those things on this particular indicator. Bonds continue to move sideways on this daily chart of TLT. We're sandwiched between the longer term 200 period moving average and the 50. Stochastics is meandering sideways for the most part, and MACD is positive. If we look at the weekly, we see the same type of price action right along the 20 and the 10 period EMA on the weekly chart. LQD, the investment grade corporate bond fund, continues to look good, continues to move in a bullish direction. We did have a little bit of a change in direction on Friday, and we have a rising 10 period EMA as well as volume by price support down below. Taking a look at the US dollar index, as we mentioned over the last few weeks, we neared this lower part of the range and we expected a move higher off the lower Bollinger Bands, which is exactly what happened. In addition, we saw the yen at oversold levels. What we would expect is a possibility that we could push back up to this upper range, an additional possibility that we could trail off here on the US dollar over the week ahead. And the reason we say that, this is a chart of the Japanese yen. The green area chart behind is the New York Stock Exchange composite. Note the pop in late August, which signaled the move to the downside on the New York Stock Exchange. We also see a move down to this lower range here, connecting these lows here at around 82.25, where we'd probably see an inflection higher with MACD about to cross down below zero, but slow still looks like it's trying to change direction. So This leads us to believe that the US dollar and the yen will change directions this week, unless there's some outside catalyst that we're unaware of. And with US dollar higher, you would expect weakness in commodities, which is what we saw last week, in copper as well as gold, which trailed off a little bit. This is still a very bullish pattern, higher lows, higher highs. But the commodity that got hit the most was crude, of course, which has been moving lower for 2 weeks. Now, this worked together with SPY at one point. As SPY was moving higher, also saw commensurate higher prices in crude. That correlation has broken. We continue to observe crude prices moving lower. So we're at the lower Bollinger Band. If that moves higher, that could bode well for the indices as well. Okay, so let's cover the sectors. This is where we look for our catalysts each week. This is more reliable than most of the others. Real estate had been leading for the last several weeks off of the first week of September bottom. Prices moved back above the 10-period EMA, the blue line, and then continued to move higher. We see an outside day on Friday. We consider this a warning signal as we observe this volume by price band overhead and stochastic moving lower on the 5-1 as well as the 14-1, which is embedded. If we redisplay with 14-1, we can see how long we've been embedded, similar to what we saw back in February on some of the other sectors. Just keep an eye on IYR this week and any stocks that you may have traded accordingly. Transports going into year end, we have a hanging man on Friday. A lot of volume by price resistance here. The 200-period moving average overhead. Slow stochastic is embedded like we saw in late February. So another indication that we could be hitting resistance overhead for SPY at least. XBI and XLV, which we'll cover in a minute, basing and moving higher. Slow stochastic is moving higher on biotech as well as healthcare, XLV. As we can see here, putting in higher lows, something of an inverted head and shoulders pattern, a lot of volume by price resistance, and slow stows turning up. MACD is headed towards the zero line. Note the volume selling last week. Keep an eye on that as we touch the descending 50-period moving average on healthcare. Materials, XLB, continues to outperform. Nice flag into the 10-period EMA. We have a doji on Friday. Slow stows turning up. If we look at the 14-1, have embedded as well, similar to what we saw back here in February, where prices ran up and then moved lower. Different circumstances, but something to keep in mind this week. XLE, another sector, little pennant pattern right at the 10 EMA, the possibility we could push higher. We don't have much resistance overhead until we hit the 200-period moving average. So watch energy for possibility of setups here. Slow stows turning up, MACD is positive. XLF is trading right at the 200-period moving average. This could help this week or hinder if we find resistance up here. This huge down bar is screwing the chart up, so it's not displaying correctly. XLI was showing relative strength a few weeks ago. Then we pulled back to the 10 EMA. Now it's resuming higher. Note the volume by price resistance levels overhead. We pushed through the 200-period moving average. Stow is near the overbought zone and embedded on the 14-1. This is the 5-1. MACD's positive. Nice volume here into the end of the month. The technology sector, XLK, showed the most strength last week, gapping outside the upper Bollinger Band. We'll need to keep an eye on this one as well. More than likely we come back a little bit. Nice volume, and this is due to the obvious earnings releases on Amazon, Microsoft, Google, and others in the technology sector. We'll be watching this for a fade lower or a push higher. More than likely we see a sideways price action and a time-based consolidation as the best case scenario. XLU had a really nasty candle on Friday, Price closed below the 10-period EMA. We have volume by price support down here at 44, a little bit lower. MACD's turning. See histogram, and slow stow is turning down from the red zone. Cyclicals also had a gap up last week, closed lower, down at, this is a Keltner channel here, down near the price action on Thursday. We could see a push higher on this sector as well. However, slow stow is indicating we could see a push lower. MACD continues higher, nice volume. So this is a mixed bag here with regard to cyclicals. Okay, so let's look at some setups for the week. This is the IBD50 list updated this weekend. We've ranked by percent change. Note there's a few new names on here: Juniper, WAL, among others. LII, EEFT, Euronet Worldwide. For the most part, we have a lot of names that reappear on the list for the week. Going into this week, considering where SPY and NASDAQ were at the end of last week, we are anticipating that these IBD50 stocks could assist or foretell a change in direction or a continuation. So keep an eye on these names. We'll print the list in a blog post as well as some of the setups that we're looking at. For the most part, these look really good going into the week. If we readjust these and rank them, sort them by sector, we can see which sectors did the best. Looks like financials were leading. Technology, obviously, from the earnings releases on Google and such. So look to these sectors. The possibility for higher prices are in order. Google, new Alphabet. I'm not crazy about this name, but we had a gap up, a move lower on Friday. I'm anticipating that we could see a pullback to breakout, a little bit lower, perhaps fill some of this gap, and then perhaps higher. Stow is turning back up, so we have 10E Stow MACD setup on Google. Amtrust moving higher, financials, Stow moving lower. Avago, not sure if this was on the list last week, but semiconductors looking good at the upper Bollinger Band. Have a hanging man there. Connect these highs, and we should see resistance perhaps. If not, we could have a breakout on this name. Bank of the Ozarks continues to push higher. After this push lower, we mentioned last week and the week before that we could see this resume higher after it tested the 10-period EMA and pushed higher. Stow is overbought now. MACD's positive. Blackhawk's looking good. Stow's turning back up. CDW looking good. Continue to follow the 10-period EMA higher. Cadence looking interesting. Nice volume. Slow Stow turning up. MACD is positive. Make sure you check earnings on these names. A lot of these are reporting this week and next. Calmaine, Cambrix trying to break. Cavium, little spinning top there at previous resistance and recent highs. Cirrus Logic, really pretty chart we pointed out a couple of weeks ago. Nice cup pattern. This is probably going to continue higher up to the recent highs at 38, and I would imagine to see a handle at some point and push higher into year end. Nice looking chart. Citrix breaking out here. Cognizant, another breakout. Constellation Brands holding the 10-period EMA. Note the Bollinger Band is parallel in the upper band. That usually means that we see a grind higher above the 10 EMA. Just watch for earnings. Stow's turning down. MACD's positive. Dave & Buster's hold the 130-period EMA. Looks like it's trying to consolidate here. Stow's oversold. MACD's negative. Dicom sideways. EBIX, I think this is back on the list. Wasn't on it last week, I don't believe. Breaking a downtrend. Connect these highs, and we have around 30 a breakout level. Stowe's overbought. MACD's going positive. Ellie Mae sideways. EPAM sideways, a little pennant pattern, probably going to break higher. Stowe's moving higher. MACD cross. Euronet new on the list. Outside the upper Bollinger Band, came back into reality. Nice volume on Thursday. Stowe's moving higher. MACD as well. Facebook, gap higher. Outside the upper Bollinger Bands. Spinning top. Could push back a little bit more after hitting the 100 level. Stowe's turning back up. Nice volume. MACD's positive. Global payments. Looks like it's going to break out here. A little pennant pattern. But Stowe is overbought. MACD is still positive. Hawaiian Holdings. This one just bolted out of this base. We missed this one, but if you did take it, nothing says that you need to be taking profits, but I would be trailing some. At least take a quarter off on each move higher. This is just continuing to blast higher on nice volume. MACD positive. ICE back on the list. I believe it was on last week. Breakout here. Looking pretty good. Stowe's overbought. Could slow down a little bit. MACD's positive. Jack Henry. Breakout of that pennant pattern. Similar to the ones we were pointing out previously. Watch earnings on all these names. Juniper new on the list. Nice flag. Push higher. What's not to like? MACD's positive. Slow Stowe's turning. LGI Homes reports on the 3rd of November. Remember IYR, the real estate group, is moving lower. Just keep an eye on the builder sector as well. Industry group. Lennox International, this is in the building materials as well. Watch the spinning top, almost a shooting star outside the upper Bollinger Bands, overbought. Looks like that could turn as well. MTSI, looking good. Semiconductors. Manhattan Associates breaking out of this pattern we pointed out last week. Looking good. Mentor Graphics, nice cup, a descending channel, breakout pattern, continuation, nice volume. MACD continues to move higher. 10E Stowe MACD setup continues to push. Now this was a setup about last week, so I wouldn't be chasing it here. Wait for a pullback to the 10 EMA on all of these names that broke out as a group. Micro Semi, this is new on the list again, I think. Back on the list. I didn't notice it last week if it is. Trying to break out of this level. Stowe's turning up. MACD positive. NetEase, Mike was in this one, I believe, for the last few weeks. Looking good. Grinding along the 10 EMA, which is also rising. Nike continues to flag. This is one I wanted to take last week, but it pulled back. Good thing. Holding the 10-period EMA. Maybe this is the week. I believe earnings are in order this week or next. Noah, little box pattern here. Flag. Consolidating in this range. We have an overhead resistance level, and that could move higher. O'Reilly breaking out finally. Paycom pulling back to the moving averages. Public Storage breakout of this pattern. We had a little pennant flag pattern. Held the 10 EMA. 10E Stowe MACD setup. You can see really did quite well last week. If you don't know what that is, it's in my book, and also published some videos on the site. Just check here, premium for the book that you can buy here. It's cheap. It is a mentor student-based approach to build a good rule-based approach to trading. So check that out. Also have the videos that cover these strategies, which will help you a great deal if you're a new trader. So just keep that in mind, not hawking the book or the videos. It just helps people to trade setups like this and not to get afraid of 52-week highs and a pennant pattern in a 10E Stowe MACD setup such as this. Regeneron moving higher off the lower Bollinger Bands. This was a 10E Stowe MACD setup last weekend, finally taken off. Price's pennant pattern here moving higher. Upper Bollinger Band, lower Bollinger Band spreading, which that tells you it could be a fast move to the upside. Connect the highs here. That's a breakout. MACD's positive, looking good on Regeneron. SS&C looks like it's going to break out here. Look at Paycom, similar type of setup. 10E Stowe MACD, maybe setting up there. Signet, think end of year, Christmas, presents. This could push higher. A little bit of a pullback on Friday. AOS, would like to trade this one, breaking out on these levels here. Trying to get a better setup on this one before we take it again. Solar Wind, software, gap up. We'll watch for this to hold. If it doesn't move below the 57 level, this could be a sign that it's moving higher. On nice volume, Stowe's embedded, 10E Stowe MACD setup. Back here, when we mentioned this the last time, a couple of weeks ago, this one really took off, did quite well. Now, just keep in mind the gap and go strategies in the book as well. Check that out. I'm going to upload a video that covers that strategy, and probably next week, if not this weekend if I have time. Starbucks breaking out, one of my favorite stocks, moving higher. Stowe moving higher, MACD's positive. What's not to like? Tesoro looking better. Note the narrow Bollinger Bands. This one's going to show its hand soon. Note the upper and lower trend lines here. Triangle pattern, probably going to break out. Stowe's reset, turning higher. MACD, 10E Stowe MACD setup on this name could take off this week. Total System Services, we missed this one. We were looking for this breakout of this trend line right here and continuation. That one just continues to move higher. Alta Salons, sideways. Universal Insurance, grinding higher. Visa might break out here, could break lower, come back down to the 10-period EMA with slow Stowe moving lower, turning back up now. MACD is positive. Western Alliance Bancorp, breakout level, wait for that to pull back to the 10 EMA and possibly this upper Bollinger Band on this new name on the list. We've traded this one before. It was on the list months ago. Okay, so that does it for the IBD50. So that's it for me for the weekend. I have a party to go to tonight. Friends' 50th birthday party, surprise. So we will post some setups on these charts and mark those up for the blog post in the morning. Take care. Cousin Benny coming to you from theclosingprint.com. So if you're a new trader, you just found out about the site, check it out. We also have the blog, which is cb_blog. It's case sensitive. It's a Linux server. Just keep that in mind. If you are not a subscriber, just input your email. This is a free site, and it is spam free. So we post our thoughts for the day, the game plan for the day, and any stocks that we're trading and thinking about trading going into the trading day. So keep that in mind. Take care. Hope this helps, and we'll talk to you on the stream on Monday.